Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Bruce asks when I'm coming to, I guess, Madison, Wisconsin. Is that correct, Bruce? I have no plans, but again, Bruce, if you have, and I make this, I make myself available to really anybody, but I know, Bruce, you're a frequent attendee. If you had a big enough group, I would be more than happy to come, and whether I did it on a webinar or I did it live, more than happy to talk about any subject if you wanted to on options. But I don't have any plans right now to go to Madison, Wisconsin. Yes, and so the question about the spot is yes, is that you'd have Aussie dollar, you'd be looking at puts, and you probably, or you might want to buy more than your allotted amount. You might want to do a delta neutral, as I showed you. So you might want to do, I don't know what the exact number is. Let's say it's 12 or 13. You might want to do as many as 25 or something like that. And if you get a big move, well, you're sort of trading both sides. You're looking for volatility there. How can you get hurt? Well, I traded a lot of volatility positions in my day, and if the spot doesn't move that much, your options are going to sort of start to depreciate pretty quickly. Your spot, you're not going to be earning that much on, even if you're right a little bit, so your options will hurt you. So that's the key, though. But if you see more volatility, your position will do very, very well, no matter if the Aussie goes up or it goes down, because you have sort of that delta neutral hedge. But you have to decide what you're looking for. If it's just a hedge or it's a delta neutral hedge. Delta neutral hedge is going to cost you more, but it gives you the ability that if it starts to really move, you can actually make money in either direction. The only problem, though, and thanks, Ruth. I'm sure I would love Madison. I've heard many people say it's great there. The one problem, if you're doing these hedges, is that your spot broker is not going to recognize your options as a hedge. So you're going to need more capital, unfortunately. That might change sometime in the future, but not in the short term. So you'll need, probably you'll have to have some extra capital. Question is, can we go through an FX option? Maybe go over the positions on your FX options website. Yeah, I guess I could basically take some of the examples that I went through today and put them up on the forum, so that's possible. I hope you found this one enjoyable today, because I don't think that a lot of presenters have given you this delta neutral look that I did today. As you can imagine, since I'm the Director of Education at the ISE, I cannot make trading recommendations, so I'm not giving you advice. Maybe some of the other people that come on have the abilities to do something like that. I can't, but what I'm trying to do is give you an academic exercise on how you might hedge something. I hope you enjoyed it. Delta neutral is great, but it's still kind of foreign. Listen, you never trade anything you don't fully understand. I think you do understand that if you had $100,000, you could easily buy whatever the number of contracts is, whatever it's 12, 13, 14. If you bought it in the money, you'd be sort of hedged, and you'd be fine with that. But then you have to decide, well, why am I hedging such a deep in the money option? And if you started hedging at the money options, your deductible would be greater, because you're not going to get any real bang for your buck until that spot rate goes pretty deeply in the money, and at that point you have lost some money. So The delta neutrals are neat in one respect, that if you get volatility, you probably make some decent money. On the other hand, in an environment like we were going through in 2009 and early 2010, where we saw lower volatility, delta neutral hurt a lot of traders. So you got to be aware of how the trade could work and why it wouldn't work. And Bruce has a sarcastic point. Does anybody fully understand the trading of anything anymore? Well, after last week and some of the craziness that went on, it's a great point, Bruce. I mean, it's hard to understand how one of the largest companies in the world was trading at X, and then it was trading at 0.7X just a couple minutes later, and without any material change. So obviously, what I learned all my career was I really didn't like to be in naked short positions, whether they were calls or puts. Never minded spreading them. You know, whether if I was bullish on a certain stock, I might do a put spread, but didn't really like the idea of selling naked options for that reason, because it was just craziness last Thursday and Friday. You know, if you have spreads, at least you limit your risk. All right, I'm going to give everybody another 10 or 15 seconds. Otherwise, we're going to wrap it up. And we'll be back to our guests next week, next Tuesday. We'll be back with our regular program, so go and sign up for that presentation. Thanks. I want to thank all of you for attending. Again, without you, we don't have these webinars, without all of you. So really important that you guys sign up, you participate. Some great questions. I want to thank each and every one of you. So on behalf of the International Securities Exchange, this is Steve Meizinger wishing you a very safe and happy trading day tomorrow. Don't forget to come back next Tuesday, where we'll have another webinar. We're going to keep doing them each and every Tuesday, hoping that we educate you as much as we can so that you never get into a trade that you don't fully understand. That's the idea of trading. So thank you again. On behalf of the ISE, this is Steve Meizinger wishing you a very safe and happy trading day tomorrow. Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.